Seasonality, consistency, and how to trade the Melbourne Cup. These are the things I'm going to be talking about today with Jody Elliss of the Trading Tigers programme here on behalf of City Index. That's on today's Sydney Direct. Jody Elliss, thank you very much for taking the time to chat with us today. Much appreciated.
Good morning, Natalie.
Okay, so seasonality, how does it impact the Australian markets? And perhaps more importantly, how do traders take advantage of it?
Well, Natalie, the Australian market is pretty much the Goldilocks Index. When we come to the top 200 stocks, it's dominated by institutions, and the institutions, which are more than 90% of the market, will gravitate towards similar behaviour all through the year, and they'll respond to circumstances that are tactical, like a major event, but other than that, they tend to do what they did last year. So if we say individual stocks, that's a complex equation, but if you say what is the index going to do, on given days we know exactly what it's going to do with a high degree of consistency.
You mentioned there consistency. Why are the Australian markets so consistent in terms of their behaviour?
The institutions look towards routine, and so as we come into periods where they're constrained in their action, a perfect example of that would be June 30. As they come into June 30, they look to buy using their cash reserves, and in the meantime, the general public is delayed in selling. They don't want to have a tax event this financial year, and so we get a consequence of we don't know what stocks are going to buy, but we do know that the index itself will lift up. And then after June 30, we go into a selling period where the institutions go back to a defensive stance in the marketplace, and they start selling, and the Australian public increase their selling as they take advantage of the post-tax event. So the consequence is index up into June 30, down after June 30.
How does this tie in then to certain events? Let's take, for example, the Melbourne Cup taking place on Tuesday. Big event there.
Well, the Melbourne Cup's a perfect example. It's the day that Australia stands still. And what will you be doing on Melbourne Cup Day, Natalie?
I will probably be watching the races.
And that's what the institutions are doing. So the institutions are strategic, not tactical. They'll be looking at the marketplace. They'll have made their decisions for what they're going to do. And unless there's some sort of major calamity like a nuclear detonation in New York or a bomb in Flemington or something like that. Other than that, their behaviour is already set, and it's down to small traders. We don't know what stocks the small traders are going to buy, but what we do know is that the traders will come out on that day and there will be buyers overpowering sellers. The consequence is, for the last 33 years, in almost every year, we've seen our index rise.
Jody, I wanted to ask you lastly, tell us about the Trading Tigers program.
The Trading Tigers program looks at institutional psychology and institutional behaviour in the Australian market and capitalises on more than 20 of these predefined moves in the marketplace. Right from January all the way through to December, there are days that we know exactly what the institutions are going to do, and they do it with a degree of consistency greater than 90% in the last 30 years.
Jody, thank you so much. Great insight there. Thank you.
Thanks, Natalie.
Some insight there into the big cup day. That's all we've got time for right now. However, do stay tuned. The Dukascopy TV team will be bringing you all of the latest economic news and FX updates. For now, though, it's goodbye.